The Fed minutes on Wednesday were perceived to be more hawkish than what markets were expecting, which surprises me, if I'm honest, because if we look at the dot plot from the last meeting, it was quite clear that there's a wide range of views on interest rates within the FOMC between now and the end of the year. So the idea that there was going to be unanimity at the meeting itself on whether to raise rates again or pause seems quite unlikely. But the revelation from the minutes that this was the case seems to have caught markets a little bit off guard. Now, I wonder whether there is an element of caution and apprehension ahead of the jobs report on Friday, but it's quite clear from the minutes themselves that policymakers are still very undecided on what interest rates are going to do between now and the end of the year, and the economic data that they'd seen up until that point had far from convinced them. And that's what makes the jobs report on Friday all the more important. Now, it may come too late in the day for the July meeting. The markets are still pricing in a heavy chance of an interest rate hike at the meeting because of what we've seen so far and the lack of progress that we've seen since the last meeting. But beyond that, markets are still undecided. In fact, at this point in time, the pricing is for one more rate hike, and then it's probably done. But the jobs report on Friday, of course, may change that quite considerably. The report itself is indicative of 225,000 jobs being added in the last month. Now, it is worth noting that in the last 14 jobs reports, market expectations have been too pessimistic in terms of jobs growth and therefore too optimistic in terms of how much progress has been made to cooling the labour market. What that means is that the final NFP number, the announced NFP number on the Friday, has actually exceeded and sometimes vastly exceeded market expectations. So we're going into this report. That doesn't necessarily tell us what we're going to see on Friday. That doesn't mean we're going to see a higher jobs report again. In fact, it could very much work the other way eventually, where we start to see it undershoot rather than overshoot expectations once the labour market catches up to where interest rates have moved to. But it does suggest that up until this point, traders have been too optimistic in terms of what they can expect from the labour market and what it ultimately means, therefore, for interest rates going forward. And maybe it is those interest rate expectations that have driven that over-optimism in terms of progress within the labour market itself. The key question now is what this means for the US dollar. And as you can see on the euro dollar chart here, we have seen the dollar trending slightly higher. This comes amid more hawkish expectations for the Federal Reserve, and we saw that once again on Wednesday. But broadly speaking, against the euro, it's more of a consolidation that we've seen over the course of the last few weeks around that 55, 89-day simple moving average band. That's the two purple moving averages that you can see on the chart here. More broadly speaking, this year we have broadly been range bound between 105 and 110. And we're not showing any clear signs of that changing at this point in time. Depending on what we get from the jobs report tomorrow, another strong jobs report could potentially see the dollar strengthen. And you can see that we've seen some support in the pair over the course of the last couple of weeks, around 108.30, 108.40. So a move below here could suggest that we are seeing more hawkish expectations, which could see a bearish development forming in this pair. But I'm not sure that's what the markets are expecting. And what I mean by that is we saw a rally in euro dollar from early to mid June, even going into the latter part of June, and the consolidation we've seen since is typically a bullish pattern. That doesn't necessarily tell us what we're going to see next, especially when you've got the unknown element of the data, but it does tell us what people are expecting potentially from the economic data. And that consolidation tells me that people are expecting a weaker jobs report, which could potentially lend itself to weakness in the US dollar and a bullish move in the euro dollar pair. But as I've just alluded to earlier, the last 14 jobs reports have all exceeded expectations on the NFP side. So it'll be very interesting to see how that does materialize. If we do see a move below that 108.30, 108.40 level, then we could potentially see that continue to drift lower. The next area of support, the obvious one that stands out is 108, the next big round number, but 107.60 was the previous area of resistance, early June, late May, but also then going into mid-May as well as a potential area of support as well. But really the big one that stands out below is around 106.50. Now 106.50 was the low from late May, early June, and it's also where the 200, 233 day simple moving average bands comes back into focus as well. That's the two red moving average bands, taking us closer towards the bottom end of the 2023 range. But as I've already alluded to, a lot of this really hangs on the economic data, not just from the US, of course, as far as euro dollar is concerned, but Europe too. The ECB is seemingly near the end of its tightening cycle as well. Markets seem to think we could see a couple more rate hikes, but again, that will depend on the progress of the data. The inflation data recently has been very encouraging, but we need to see plenty more signs over the summer that we are moving in a more positive direction, particularly on the core side. But if we do start to see one of these move in a more positive direction compared to the other, that will ultimately dictate where we see euro dollar go from here. So far, it seems that we are seeing a roughly moving in tandem in terms of market expectations, but quite clearly going forward, it's really hard to say. And if we start to see progress on the US side tomorrow, that could have a big impact on how euro dollar trades going into next week.